We have three main events actually happening this coming week and that are gonna move the markets in one way or another. So there's gonna be lots of volatility happening in the market. So starting first with major earnings. Earnings from companies regrouped into the FAMP acronym. Facebook, Apple, Amazon, Microsoft, not Netflix because Netflix reported last week. Facebook, Apple, Amazon, Microsoft, Google is going to be tremendous. Why? Because these 4 to 5 companies only themselves represent 27% of the weight in the S&P 500. Meaning, if the earnings are actually positive, it can move the markets higher. If earnings are not that positive, it can move the market lower. So whether you want to believe it or not, whether you want to accept it or not, AMC is part of the Russell 2000 and is pretty heavily weighted there. And AMC is also part of multiple indexes, multiple benchmarks, hence move sometimes according to the market. I mean, despite the whole manipulation. So besides the earnings, we also have another major indicators. So major indicators coming from the economy, and we're going to look exactly at what it stands here. So we do have the manufacturing PMI on Monday. These usually impact majorly the Dow Jones and sometimes the S&P 500. We have the ADP non-farm employment change on Tuesday morning, plus the services PMI, the factory orders, the ISM non-manufacturing, and the Fed interest rate decision. 4 major items here that are going to go all the way back to what the Fed is going to do. Because if we still continue to have strong numbers into the employment, it means the job market, it's still strong. And this is something that the Fed is eyeing closely to move completely with the monetary policy changes into the end of this year, going to 2022. On Thursday, we do have the non-farm productivity, the trade balance, not much to move the market there. And then on Friday, we do have the non-farm payrolls, which also will give us indication into how the job market currently is looking like. So some things to keep an eye on, and we're going to see exactly how this will move the market, especially in the pre-market video that we post weekly and daily before the market opens. Now, we also have these other news that can potentially move the markets higher. Democrats pretty much there on the US social spending bill, according to Miss Nancy Pelosi. Keep in mind, we're talking here about a $3.5 trillion bill, infrastructure bill, that is aiming to pretty much bring up to date, revamp, and create a lot more infrastructures, meaning bringing tons of jobs, but also tons of businesses for major companies listed in the market within the S&P 500 or the Dow Jones. So if you want to build bridges, if you want to upgrade schools, roads, housing markets, if you want to jump into the green energy, we're talking about some heavy business for companies in the US, and the Russell 2000, where we have some of the small mid caps, are also going to benefit tremendously from this bill. So this might be already priced into the markets, but I still a final decision on this being confirmed and agreed in Washington can definitely pull a lot more volatility to the market. So lots of things to look for. And finally, how can we not end without talking about this Citadel versus the SEC Monday SEC court hearing? It's going to be an oral hearing, and actually the court is going to have an audio live streaming about this. We covered this in a previous video earlier today, but let me know in the comment section how you see things happening. It seems like a very big deal because this move from the IIX and the D limit order is something that will remove a lot of business, hence a lot of money from the pockets of Citadel. So I guess that's the reason behind the whole, lawsuit here towards the SEC. But how big of a chances do we have, and by we I mean, the retail investors actually gaining once and for all here, something that is the closest to having the door pull closed and shut down. So, I mean, only time will tell, right?